Inflation has come down quite a bit, but the residual effects continue to be very important for people's view of making ends meet. So what we found is that quite interestingly, people have been saving quite a bit of money, much more than they would have prior to COVID. Even people who are challenged to make ends meet, they're still saving a little bit of extra. They're saving it because they are concerned about whether or not they are going to have a job loss, whether they become unemployed. They're also saving more because they're worried about paying the bills at the end of the month. And the prices of things have changed so much and are variable, so that you don't know exactly how much you are going to need to get you to the end of the month. So people are keeping a little bit of a rainy day fund or a little bit of a savings buffer. And for example, they're putting off taking that vacation or that holiday that they until they can get a sense of what their finances is. And then the third element that we found to be particularly important is if people do have a mortgage and they initially financed that mortgage a number of years ago at a much lower interest rate, they're worried about making sure that they can make the higher mortgage payments that might be associated with a refinancing situation. So there's quite a bit of saving that is part now of the overall economic landscape, and understanding how long that saving will continue to last becomes a very important ingredient when we think about consumer behavior in the various parts of the UK.